we've been tracking Apple, right? So Apple gives us 5 waves off the low, off the high. 1, 2, 3, 4, 5. And that was confirmed today. That's 5 waves down, which does need to be, respected. There is a corrective pattern known as a zigzag. And the reason I'm bringing this up is because of all the evidence I just showed you across the board, showing you 3 waves only. If those 3 waves turn into 5 waves, then I'm dropping the zigzag theory. But the zigzag theory is 5 down, 3 up, 5 down. It's a very sharp correction. And it's almost like the market is trying to get it out of the way so it can return to the uptrend. But I would give that. I'm gonna basically allow Apple to prove me wrong on that. And as long as we have 3 waves across the board and we get some large degree bounce, I showed you all those 3 wave patterns, even in the S&P 500 as of right now, I'm going to just basically assume that may be going on. Now, there's another scenario where this is the start of your first wave. And let's say Apple gives you a large second wave that maybe fails here, but the market continues higher. Without Apple, which is hard to believe, but maybe it will. Here, we'll do this move right here. So maybe the market pushes higher and makes a higher high, giving you that 5th wave, while, say, Apple makes a lower high. So that's also a possibility. So from my perspective, whether this is a zigzag or a first wave down, there will be a bounce that follows. And that bounce should lead to lower lows before this is over, even if it's the zigzag scenario. So that's what I'm expecting with Apple. So far, it's when you see 5 waves down like that, you need to be cautious. But if I'm looking at everything else, it's saying that maybe this isn't the time. Maybe it's not.